Hey there guys, and welcome back to Alex Invests. And I know I need a haircut and maybe a little bit of a shave, but there's just no time for that when the markets are so green today. It is fantastic. Yesterday we saw a little bit of green and we saw less correlation. That's what I was saying yesterday between the bond yields and the stock prices, because we saw bond yields up, stock prices up. Now today it's important to know that bond yields are down a little bit, but I said we might see green again today because we see less correlation there. And we might see just a turnaround in general in the markets. And I think that's what we're seeing now. So that's really important. And just the amount of green today, I think, is going to continue sort of have institutions moving back into technology here compared to kind of these recovery stocks that they had rotated out of or into. And now we're going to see back rotation back into tech here, I think. And a lot of retail investors as well are going to see the market start to be green here. And that's going to continually push us back up. So yes, I think the correction may be over, but of course we can wait to see what happens tomorrow. If we see green again, then I think it's quite for sure that we will see prices continually move up from here. So that's good to see. And it is something I mentioned yesterday that if we see green today, that's going to be a very, very good sign that the correction's over and we're going to see prices come back up. However, today I want to talk to you guys about BrewBilt Manufacturing. I want to go over the deal with the strategic partnership with Simlatus that they have and their kind of new facility there. And then I also want to go over their 1A filing and kind of their public offering there that they are looking to do here. So those are the two things I want to go over with you guys. Quickly, we will take a look though at the markets. We can see here my portfolio is very green, fuel cell extremely green. I kept telling you guys this $13 level is insane to get in here. We're through this resistance level. I think we're going to continue to see FCell moving up here. Same with Tesla. I did buy some shares there just last week, and of course Palantir. This is one that I have mentioned to you guys, and I told you guys I would potentially be picking up shares, and I have picked up shares. I picked up shares this morning at around that 23.40 level. So all good stuff there. Let's hope it continues. Enjoy this green, guys, and that's that there. Now let's get into sort of the Simlatus deal here first, and then we'll go into the 1A filing, because I know you guys are quite curious about that too. So here it is, right? Simlatus, soon to be BrewBilt Brewing Company, and that's really important to note. We'll go through that in a second. And $125 million strategic partnership with BrewBilt Manufacturing. Very good stuff here. So what's important to note, right, is SIML has purchased the facility, and the brewing facility will be licensed and in operation by summer 2021. So that's coming up here in summer, in this coming summer. So that's really good news there. Now, this point here where it says Simlatus soon to be BrewBilt Brewing Company, BrewBilt Brewing Company, that is essentially where the BrewBilt wanted to have their own kind of brewing of beer and contract brewing out so that other people can come to them and be like, I want this type of beer. Can you make it for me? And they'll make that instead of people buying the actual brewing equipment to make their own beer, right? This way, basically, they get the beer made for the customer. They make it and they give it to the customer, right? So that's good things there. And I think that's kind of what Simlatus is going to be focusing on here now is that BrewBilt Brewing Company, right? And becoming BrewBilt Brewing Company so that BrewBilt Manufacturing can focus more heavily on that brewing equipment side of things, which obviously is the bigger kind of revenue generator and will turn them into a bigger company in general here. So that's really good stuff here. Now, what we can see, right, is the strategic partnership will allow revenue capture for customers who want to build a brewery and customers seeking to contract brewery to make craft beer. That's what I was just saying, right? How they kind of have both sides of this now, and each company is focusing on one thing, and that's what makes the strategic partnership so good here. Now, what we can see is projected beer sales are 25 million to 125 million over the next 36 months. And this is, again, that contract brewery thing where they're going to be selling the actual beer, right, that they produce 2 customers, and so that's going to be the smaller part of their business. And I realize that 25 million to 125 million is a large range there over the next 36 months. But if we're sort of in the middle of that, let's say the 75 million, that's going to be a lot of extra revenue already for BrewBilt Manufacturing, considering their recent financial report. Their 9 months ended September 30th, they had $1 million in revenue. So 75 million over the next 36 months, which is 3 years, is still a decent amount of extra revenue there. And we can see projected revenue for building brewery systems, and this is where BrewBilt Manufacturing comes in, right? Is projected to be 250 million over the next 48 months. Now, again, I realize 48 months is 4 years. However, 250 million divided by 4 comes still out to about $62.5 million in revenue per year, guys. So that is insane compared to sort of the revenues they've been generating in the past now. So really, really good stuff here. And I think this partnership is really going to be good for both of these companies, because they're going to be able to, again, BrewBilt's going to be able to focus on that brewing system side of it, which is, again, going to generate them so much more revenues. And that's really where they can grow a lot, I think. And so this kind of goes into their strategic, their public offering that they have just been they have just filed with sort of that A1 filing, because they're kind of going to need some of that cash first in order to, build out this new $125 million facility and be able to essentially do some marketing there and everything kind of to get all this going, right? And so let's go through that now. So the maximum offering here, as we can see, 100% would be about 10.5 billion shares. Now, that's a lot of shares. And at first I was like, how can they do that? They only have 10 billion authorized shares. However, recently, and this is on the OTC Markets website, they have gotten an authorization of 20 billion shares. And authorized shares are, again, the maximum amount of shares that can be issued in a company. This used to be 10 billion, and now it's being authorized for 20 billion. And so that's why they can do that, first of all. Now, this kind of, again, goes through, we'll go through what they're going to use some of this capital for, and then we're going to go through the dilution aspect of it, right? And again, so a 1A filing here is essentially so they can get exemption from registration requirements here. And this is going to be over kind of this 12-month period, and it has to be filed 21 days before the public offering. So they've done that, and here now we're kind of in this 12-month period, right? So we'll start here again, and here, this is if they raise 25%, 50%, 75% of the offering, or 100%, and again, 100% is where they would have that 10.5 billion shares. So the cost here of each of them is 55,000. It's basically nothing, right? And net proceeds obviously go up substantially, the more they raise, and the most, again, is $50 million here, which they could potentially raise in order to kind of grow their business here and their operations, and specifically some of that stuff with Simlatus, I think, and their strategic partnership there is also a big reason why they're doing this strategic partnership. Now, what we can see is we don't need to go through these and these, but or these two, but here advertising, they have about $1.59 million, and again, they're just looking to do some advertising here again, and this goes into sales and marketing too of 4.5 million. And what's important to note here is the percentages don't change depending on which kind of how much they raise here. What changes is the capital amount, obviously, because the amount goes up when they raise more money, but the percentages of what they're using the money for stays identical in each of these, right? So we're just going to look at this, and we can see kind of what they're spending the most on. And what it really is sales and marketing here and advertising. They're doing this again because they need to have this marketing and so they can get more sales, etc. And really are pushing for these brewing systems so the world knows about them, and they want to advance kind of in Europe quite a lot there. as well. So that's, I think, where a lot of this money for this offering is going again, because now they have this new facility, they have this new strategic partnership where they have the opportunity to build more brewing systems at sort of a more efficient rate here. So that's kind of why they have a lot of this money, I think, in sales and marketing here. And of course, tools and equipment kind of goes into the same thing there, where they are spending a lot of money on tools and equipment in order to build these brewing systems again, so that they can again build these more efficiently, more quickly, and they can build more of these as well. And that's going to generate those big revenues that we'll hopefully see in the next 4 years, and even in the next year here, really, where we're hoping to see quite significant revenues from this, right? So that's good. And again, facility lease obviously there, and working capital again, always there as well. I've mentioned that before, that, you know, working capital, it has to be in there, and it's always in there really, because they need to continue operations, etc. there. So that's good. Now let's move into dilution here quickly, because I know you guys were wondering about this. A lot of you guys had comments on this, and essentially, again, obviously it depends on how much they raise here, depending on how much the shares get diluted, and it also depends on here how much they are offering these shares for, because here it's at a price of 0.005, right? And here it's at a price of 0.001. So that's kind of the difference between this and this right here. So if they do it at 0.005, which of course I'm hoping they do, and potentially that means the percent goes down a bit, right? Maybe they only raise 50% here, but it's going to be better for us as investors, and in the long term, I think this is going to be much better if they do the 0.005 as well here. So here we can see dilution to new shareholders. If they raise 25%, we're going to be diluted down to 0.0034 per share. If 50%, again, then we're getting diluted 0.0019 per share, and 75% 0.0013 per share. So obviously, the more they raise here, the more we go down in price. But again, I think with them growing here, this dilution isn't going to matter too much, because people are going to be buying as they're growing here. So that's quite important there. And again, if we're at that 0.001, this is the new dilution to shareholders here. And that's kind of how you can read this statement. If you guys want to look at it yourselves, it's just the 1A form on the SEC website. And that's kind of all I wanted to show you guys there, really, and just explain to you kind of how that works depending on how much they raise there. So that's pretty much it for you guys. I hope you liked the video. If you did, please like, subscribe, and leave me a comment as always. And other than that, I hope you guys have a fantastic day. Enjoy the green, guys. I'll see you guys tomorrow.